Hey everyone, Dan here. Before we get into it, if you enjoy these videos, please hit the like and subscribe button. It helps a lot. And also keep in mind that these are my own thoughts, opinions, and ideas. These are not meant to be, nor should you take them as investment or trading advice in any way, shape, or form. Do your own due diligence, put in the work for yourself, and make your decisions based on that. Enjoy. All right, folks, here we are just a few minutes after market close on Tuesday, August 31st. We're going to take our daily look at SoFi. SoFi ending the day basically flat today. I mean, it's down a smidge of a percent, as you can see there, on about 14.4 million in volume. And so basically just staying flat for the day. Now, if we take a look here on the 5-day, you see back here on the 25th, it rejected off of this 1502 level, which we had charted previously as a resistance until it can flip it to support, if and when it can flip it to support. And that basically has driven it down here to try to catch support at this 1411 level, which is the battle that's waging at the moment. Now, the challenges that I see here in the short term are as follows. We essentially have these series of lower highs coming in, right? So you see here coming down and pinning about there, all capturing all of those lower highs below it. And then the lows are also, I mean, if you just take the low of the day, that's obviously not it, because that would be coming up a little bit. But the lows of the day for the last few days, I mean, we could extend this back further to here. And just bring this as such. So we see it's not really a channel evolving, but we certainly see a series of lower highs and lower lows that are populating the chart at this point. And so it's putting a lot of pressure on this 1411 support zone. In other words, every time that the price comes down here, the buys have to be there. And we saw today it dipped down to 1397, which is the lowest point over the course of these days that we've seen. And so to me, the risk there is that it exhausts the buying pressure that exists at that level, and it then starts looking for the next level down. So that's, to me, the bearish sign of things in the short term. Now, the bullish side of things in the short term is actually more focused on today itself. So today we see this big bump in buy volume coming in here toward the end of the day. I just happened to have clicked over to SoFi when I saw this big candlestick forming, this big volume breaking out. And so this almost 600,000 just in this minute alone. And then it sort of, died down, continued to barcode, as has been the case with SoFi for, I guess, weeks now. But then saw it really start to pick up here about 340, 338, somewhere around there, and still was relatively sideways, but then it broke out on this candle here, which came in, I mean, that's only 87,000 in volume versus, like I said here, almost 600,000. But this was able to build in a bunch of buying pressure that just sort of layered on top of each other. Now, we did see a big red candle to finish off the day here right at 4 o'clock. But that lead into close, has me wondering, could we sort of be on the precipice of some bullish action? I don't know. The other bullish sign from today is this huge inflow of large scale orders. 12.35% of the order flow today coming in large scale orders. So a huge bump up there. And we do see, if you look back at the previous videos, as we've started to see bumps up in large scale orders, well, I guess any large scale orders coming in, period, in or outflow. But as we've seen those really start to come into play with SoFi, we've seen generally the inflow days outpacing the outflow. And when the outflow dominates the inflow, the outflow is relatively smaller than the big inflow days. So you see here, for example, right, the inflow day that followed this outflow day was larger. The inflow day today that followed yesterday's outflow day, much, much larger. So the degree to which this compounded by, like we talked about in last night's video, Noto coming in to buy more shares last week, I guess it was. That, I don't know if it's an optical illusion. It certainly could be. Or if there is something on the horizon here that's going to help stabilize, claw back some of this retracement that we've seen in SoFi. Obviously, there's a long way to go, but those are the things that I'm looking at the moment. This green finish to the day, these last 20 minutes or so, the large inflow that came in throughout the day today, but then having to kind of marry that with all of these lower highs coming in day after day after day, while lower lows are being made day after day after day, and the pressure that puts on that 1411 support zone for the buyers to continue to show up time and time again when it hits that level. Now, we look here on the daily, and this wedge continuing to flesh out. We'll see if it can stick itself to there. If that buying pressure does come in and help sort of bump the price up, then it would continue through this wedge. But also keep in mind that if we fall through, if that buying demand that we've seen around this 1411 zone does get exhausted because of all of the pressure that's been put on it to continuously buy, then the next level down, as I see it, is that 1305 support. We'll see if this 1356 low that was just made previously would still hold or not. I don't know, maybe. But this 1305 traces back to these levels back here that were resistance at this point in time. So not a lot to draw on as we see the price deplete so much. We also had this near miss at 1314 as well on that wick there. But I mean, that's not going to be much time or volume spent at that price point. But that's what I'm looking at the moment, and volume kind of keeping pace for the time being. So we'll see how that plays out on the daily. MACD just hinting a smidge at, it's not even really enough of a move to call it a crossover. It's more so what we sort of see here, this sort of MACD and signal line kind of laying on top of each other and then choosing a direction. So we'll see if it sort of repeats that, but that's sort of what it's doing at the moment to my eyes. And we do see it coming up though. If it is able to kill this bearish momentum at this point, as I've been saying, that is to me a pretty good sign, because it wasn't able to muster much bearish momentum after this big gap down post earnings call. So we'll have to see how that plays out in the days ahead. It's just been, as you know, quite the snail. And so we flip over to the data side of things. The short interest today bumping up slightly, but Ortex still has this fixed under 10%, so 8.55% of the free float being shorted at the moment. Utilization still not retesting that 50% level that we did see last week, I guess it was. And so for the time being, it seems that shorts are leaving this alone as far as I can tell. We did talk in yesterday's video about FinViz consistently, not just yesterday, or not just in this time period, being an outlier with having a much, much higher percentage of the free float being shorted just week after week, month after month. And I had said at that point, if anyone knows why that is, or if it is for some reason more accurate, please feel free to comment below. I haven't seen anything to that effect, but I'll just sort of reiterate, if you do know anything about where FinViz gets those numbers from, they just seem to be an outlier between Ortex and Yahoo and MarketBeats and wherever else that we're looking for short information. They seem to consistently be higher. So take that for what you will. Max Payne sitting at 14.5 still. So that's where we saw it yesterday. Still sitting there today. Just one quick note on Max Payne. Folks have been asking, what is Max Payne that you're talking about? I would strongly encourage folks to just Google these things. These are pretty easily accessible and pretty easily found on the internet if you just Google what is Max Payne. But here on Swaggy, he talks about Max Payne theory suggests that the underlying price for the option or stock price will be pinned to a specific price at options expiration, also known as the OPEX. This would inflict the maximum amount of pain in dollar loss to all options holders, which includes those that bought calls and put contracts. So to sort of try to make sense of that, what the idea here is that folks are buying call and put contracts on SoFi, and the spread looks like this. So if I hover over any of these, the $18 calls that are out of the money, obviously at this point, 15.12 million to 121.8 thousand puts. Now, if the price of SoFi on the 3rd of September, which is this Friday, were to exactly close at 14.5, then you see these are all volume, right, of calls and puts. These would all expire except for the 14.5s, out of the money and completely worthless. Therefore, the people who wrote the contracts don't have to deliver any shares to fulfill those contracts, which additionally means if they don't own SoFi and they sold calls, but they sold naked calls, they don't have to go buy 100 shares per contract of SoFi to then deliver them to the person who bought that contract. And so this sort of has ramifications across the board of keeping market makers or underwriters, contract writers, from having to deliver on what it is that they've underwritten or sold. And then it also means that the most amount of people who have paid a premium to those people who underwrote the contracts would have nothing to show for it, as their option would have expired worthless. So this is a way in which to make sure that as many options contracts as possible do not get exercised. Exercise is when the actual transition of the underlying stock, in this case SoFi, trades hands or brokers, or however you want to think of it. But if my put option expires in the money, then I can put my SoFi shares to someone else. And if my call option expires in the money, I can call away 100 shares from somebody whoever sold me the contract owes me 100 shares. And so I would just say, to the extent that what I just said was more confusing to you, just look up some videos on YouTube about call and put options contracts, just the fundamentals, the basics of how options work, and that will clarify some of the terminology for you. Additionally, just Google around, and you're going to just have to, I guess, figure out the jargon, learn the jargon, and then some of these things will start to make more sense to you. But if you kind of have a limited or remedial understanding of some of these concepts already, that's the price at which most of the contracts will expire out of the money and worthless. Okay, so tangent, but it came up in the comments enough times where I just said, okay, let me try to talk through this in the video. But for better or worse, we've done that now. All right, well, this is sort of where we are at this point. Snail moving sideways at the moment. My biggest question is, are the buyers going to continue to show up at 14.11 to provide the support needed to buoy the price or to see the price gain at all? As well as, is there anything to this large order flow coming in today in large scale orders? And is there anything to what we saw toward the end of the day today with some pretty solid buy volume coming in, even though we ended the day with a big red sell volume? Leading up to that was kind of interesting to me. And most of it occurring above that 14.11 support zone. So that's what I'm looking for as we head into tomorrow. I hope you had a good Tuesday, and I appreciate you always stopping by to check out the daily SoFi video. It means a lot. And I hope you have a good evening. I will see you in the next video.